Good afternoon, everyone. I'm Bagadon at StockMarketCaddy.com. It is Sunday, July 23rd at about 12:20. We got a question from one of our monthly members, and thank you. The gentleman knows who he is, and thank you for asking. We're going to attempt to answer his question about the Nicklaus timing model that he asked. He wanted to know about the performance of the Nicklaus timing model. So we're going to try to, or at least provide some insight to the Nicklaus timing model and his question. And then we're happy to answer other questions, and we'll also probably make this available to other members and even the general public on YouTube. First, let me introduce myself. I'm Bagadon at StockMarketCaddy.com. We are not a broker. We're not a financial advisor. We're not suggesting that everyone be a trader. We're not managing anyone's money. We're not making specific recommendations to buy or sell anything. And it's very important to understand that. You may be hearing it as just a disclaimer. It is a disclaimer, but it's much more than that because it defines the very essence of who we are. Because after saying that, you might say, well, then who the hell are you? What are you doing? We are a mentoring site. We are a mentoring site for those folks who want to learn how we approach the markets, to have access and availability of the tools that we use and the insights on how to use them so that they can manage and play their own game. Now, our monthly member asked us about a strategy that we highlight each and every night called the Nicklaus timing model. First, let me assure you that the Nicklaus timing model does not use Bollinger Bands, even though you see Bollinger Bands here and you see what John Bollinger calls the %B. We do like Bollinger Bands. We do use them on occasion, and we will even sometimes use the %B, but we're not using it in the Nicklaus timing model. What is the Nicklaus timing model? The Nicklaus timing model, as you're seeing here, is a tool that we will use to stay in gear and on the right side of the market on a daily basis. Not an intraday basis, but a daily basis. So the signal, when it does come through, comes through just 1 second, one trade after 6 p.m. on any given day. And it will either be short or it will be long. Now, I'm going to give you a peek behind the curtain. I'm going to customize and show you that what you don't see are 2 additional data streams. The Nicklaus timing model is using the ES contract. The data stream number 2 is the VIX contract, the VIX futures contract, and data stream number 3 is the 10-year Treasury. By the way, the range on this goes all the way back to January 1 of 2009. What the algo is doing, there is an algo that is generating trades, long and short. It is looking at the underlying data, the data of the VIX and the data of the 10-year Treasury, and making a decision to be long or short. This was a concept that we had back 5 or 6 years ago. We did not have it in 2009. But after seeing the market from 2009 on, after 5 or 6 years, we were saying there appeared to be a direct correlation between the underlying markets and those 2 other data streams, and we began testing for it. What we found was that prior to 2009, there didn't seem to be much of a correlation. But after 2009, it did. We ran back tests on our models, and then we also ran something called forward tests, and they were very, very promising. Now, I don't have the time here to go into that kind of detail. For our member that asked, we will hopefully do that here in the not too distant future and add it to our private website here shortly so that you can see some of the backtest. What I want everyone to understand, especially our monthly members and even our annual members who have this tool on their desktop, is that when we present this model, on a nightly basis, we are running it what we call wide open. It does not have any stops on it. It does not have any profit targets on it or any other exits. It will perform much, much better if you do that. Now, the only way one could do that is being an annual member, having this tool on their desktop and beginning to add exits to the strategy. The reason why we do not build in these exits is that we want to be able to report on how it is broadly interpreting the market for all of our members, but in particular for our monthly members. Our monthly members may use this as a trading signal to place trades, maybe with minis, maybe with micros, maybe with options, or maybe just using it as a barometer as to stay on the right side of the market. So let's go look though at the results. And these results go back all the way to January of 2009. Now there's a tremendous amount of information here to review, to assess, to evaluate, and we don't have the time here on YouTube to do that. But I want to show you what this looks like market by market. So let's go back here to the overall performance summary. And here, if one had been trading one mini contract, taking every single signal to highlight a few things, it would have had 550 trades. It would have been profitable in 38% of those trades. It is a trend, pretty much a trend identification system. Profit factor, I think I said, of 1.3. Now again, this has no exits in here. It's just operating broadly. And there's much more information. This is just on the ES. And so we can come down and show you, and this is in the market 99% of the time, which would not be a good idea. So for annual members that have this on their tool, they can build in exits to control the amount of time that they're in the market, right? So we don't have the time here, the luxury to explain how that works, but we do when we get into Q School. And for the member that asked, this is, in large part, one of the big things that we will discuss in detail in Q School. Additional trade analysis information is shown here. We can see the average time in market is 9 days, 12 hours, but we would want to try, if we had this, if you had it on your desktop, you'd want to be able to control that and tighten that up. Okay, so there's additional information. The performance graph, let's just show you what the equity curve looks like. You can see for a good period of time, it didn't do a whole lot and then got really going. But you got to please understand, I got to be very careful, not from a disclaimer standpoint, but just a reality standpoint. New traders, novice traders, passerbys may or may not understand what's happened in the past may or may not happen in the future. This is not a guarantee that it's going to continue to do this in the future. That's not how we use these models anyways. We use these models as a benchmark to measure our performance against this. And you may look at this and say, oh, that is wonderful, I'm going to do this. That would be the wrong conclusion because one doesn't know what the future holds, what is the overall. And even here you can see there have been some drawdowns. You need to have the skill set when this is on your desktop to understand how to interpret this and how to use this to manage your exits and manage your own trades. That is much more important. We can look at just the ES though as an example of kind of the detail, just broadly, the monthly net profits. Let me just show you. This is the average profit by month over the course of some 14, 15 years. And we can see the months when it is most profitable. January, February, March, it does really well. April, not so much. May, not so well. June. So you might even use this sort of data to decide what months you want to pay most attention to it. Or, but again, there would be a lot of other tools that you would want to use. This is the that was the underwater tool. Do you want to see to what extent it is underwater? And this is the overwater, if you will, the equity curve shaded in black. So there's a tremendous amount of information when somebody says to me, what is the performance of this over the last 15 years? Well, there it is. But I try to take a few extra moments to explain that in the hands of an experienced trader, she knows that there's much more that they can do with this program when it's in their hands if they have the skill set to optimize and get the most out of it. I hope that makes sense. But let's come across. So the question was, what has the ES? What is the performance of it? Well, there it is, broadly. The YM, the Dow, there it is. The NQ, same period. It's the exact same period. There's the NQ. That's what the performance graph looks like. The Russell is the weakest. It's kind of, and maybe one doesn't even want to use this on the Russell. The Russell is pretty narrow. And then we also use something called the VIX. And the VIX has a different function to it, and we use it a little differently. And in the actual performance, we use the VIX itself. We don't trade it. We never trade it to the short side. We only trade it to the long side, and we're very selective where we might do that. So to the member that asked me about the performance, I hope I've given you some insight as to what that is. But please understand, what's happened in the past may or may not happen in the future. And that's the case with all strategies. And that is much more than just a disclaimer. That is reality. And one might ask from that, then what good, what value does anything have in the past if it is not a marker or a precursor to what happens in the future? The value in these backtests is having the tool, having the model, having the skill set to help you manage the variables, your time, your leverage. But that is a very individual pursuit, and one must have the education to do that. And I wish I could pack in weeks of education. We can't do that on YouTube, but hopefully we've given that gentleman some insight. As a member, thank you for asking, and others that might be passing by, the performance characteristics of this particular tool, how we went about building it. And when you are in Q School with us at Stock Market Caddy, we will spend whatever time is necessary to go through and explain in greater detail how you can use it to manage your own trades. We wish everyone the best. I'm Bag It On. This is StockMarketCaddy.com. You're welcome to visit our website, and you are also welcome to call any day, 9 a.m. to 9 p.m. at 813-758-8263. Good luck, everybody.